Welcome back to another episode of the Startup Operators Weekly Roundup. The Weekly Roundup is a show for people who like to stay updated with the latest developments from the Indian startup ecosystem. If it's the first time you're joining us today, then do consider subscribing to our channel for some great content on Indian startups. If you're new to the podcast, then do consider subscribing to our channel for some great content. Now, a couple of highlights from this week's roundup. One is definitely how what would have been the second largest deal in the Indian startup ecosystem slipped out. Second would be Hero Motors finally forays into the EV sector after having invested in a couple of EV startups. Karnataka issues notice to cab aggregators saying that the auto services which they're applying is illegal. And lastly, we have NRAI, which is the National Restaurants Association of India, asking its members to log out of Swiggy's Dineout. Now we'll be discussing how that is going to impact Swiggy's $120 million acquisition. Roshan, last week I heard you watched a really great movie.
I
Let's
did.
start
I
with
did.
that.
I watched Ponniyin Selvan with a few of my colleagues, and they have some embarrassing photos of me falling asleep for a brief moment in between.
A brief constituting of 60%, no, 40% of the movie's
I
time.
think it was 15 minutes, but that doesn't speak fairly about the movie. The movie itself was really nicely done, right? I mean, watch it for the beauty and aesthetics of that period. Certainly, I mean, a very nice movie to watch. What also struck me was the VFX work and everything, right? I mean, Balaji Srinivasan often makes the point that, India is the VFX capital of the world. We have solid talent, right? Even powering Hollywood movies and everything. And the recent movies, whether it's RRR or whether it is, Ponniyin Selvan, lesser spoken about Brahmastra and the likes. But, I mean, some of these movies definitely, prove the point. We have solid skills on that front. That we could actually export to the world. So yeah, I mean, it's been an interesting week, I would say.
Yeah, and I mean, Ponniyin Selvan, I mean, this is a shocker to me. I think in its first weekend, guess how much they grossed? 300 crore rupees.
Wow.
In
I
3
mean,
days.
there's something to period dramas, man. I think people have a real yearning for period dramas suddenly, I mean, whether it's Bahubali or RRR or this.
And of course, the cast.
Yeah, and the cast as well. The cast was really good. Yeah.
Yeah. Hey, also, I came across this report this week which said that funding in the Indian startup ecosystem has declined by over 58% year on year. In the month of September, all venture deals combined amounted to $810 million. And not only is it a 58% decline year on year, even if you were to just compare how much decline there has been just compared to January of this year, it's an 82% decline from, I think it was 4 billion or something.
Wow. Look, I mean, 2021 is an unfair comparison, right? I mean, you're comparing the biggest fundraise year for Indian startups, right? I mean, we raised something like $40 billion in 2021. So the base itself is really high. And, I don't know, even the most optimistic person didn't think that it was just going to keep amping itself over the years, right? And you've seen what's happened in the US, right? 8.5% inflation. The Fed is going to hike rates again. And so obviously there's going to be a crunch on liquidity sooner than later. And so everyone is sort of playing a wait and watch game, and I've often said that, early stage funding will continue to thrive. And it is the case. I mean, although the report perhaps mentions that, for that particular month, it seems like early stage has actually declined, and, growth stage has actually increased for that month.
But that was a marginal increase.
Yeah.
That too.
I mean, see, when you compare, let's say, August of 2021 with August of 2022, there could be some quirks. It ignores the funding around these months that could have happened, right? I mean, so that's fine. With early stage, I think even if it doesn't match the 2021 enthusiasm, I feel that it has declined at a lesser rate than, some of the other rounds, right? Which is logical, obviously. Smaller amounts of money, and capital is there. I mean, we've had 20 VC firms raise funds, right? I mean, and they're going to deploy in the next couple of years, 2-3 years.
Yeah, that
So
money has to go somewhere.
yeah, exactly.
Okay, but definitely the highlight of the last week was the slippage of the PayU and BillDesk merger. And this deal has been in the works for, I think, close to 1.5 years now. And there have been multiple times we have even discussed in the podcast that why is this moving at such a slow pace? And I think the last time we discussed this was when CCI gave its nod, that okay, this deal can go through. But I don't know, for reasons which are unknown, it has slipped, right? But had this deal actually happened, BillDesk and PayU, this new entity, would have completely dwarfed, fintech players like Razorpay, Paytm, and the likes, at least for bill payments. Second largest deal, the largest deal being Walmart's acquisition of Flipkart. This definitely will have some effects into investor and founder sentiments.
It kind of reflects the times, right? I think it's a bad case of buyer's remorse, if you ask me. I mean, 2021 August was, the heights of optimism, and we've just spoken about how there's been a decline in funding, and generally there's a crunch, right? I mean, so I personally feel it could be just that, just a buyer's remorse, and process, which was Naspers earlier, is trying to get out of this through a technicality. They had something called a long stop date, which was September 30th, right? By when all of these formalities should have been finished. And if the parties were still keen on going through with this, I mean, they could have extended the date. But given that I feel like process will perhaps use this to sort of negotiate down the valuation and see if they can trim that a little bit. Otherwise, adversely, it could be courts and arbitrages and all of that drama happening. See, the reason it took long was because of Competition Council of India looking at the impact of something like this, right? See, between BillDesk and Process or PayU, they would have accounted for 40% of the market, which is huge, right? I mean, the next player would have been Razorpay, which is probably around the 15% mark. And that's a huge volume of transactions, and especially when you consider payments, it's a lot of sensitive data, right? BillDesk interestingly works with a lot of government agencies,
right.
banks, PSUs, and so on, right? I mean, and a sort of a foreign entity owning all of this is definitely has an impact, right? I mean, there were as many as 40 cases filed with the CCI saying that this should not go through. So even with all of that, September 5th was when it was cleared by CCI, and then the next hurdle was the whole RBI nod for this, right? So it would have been interesting, I would say. BillDesk, it's been a 20-plus-year-old business. Founders are amazing. Really, I keep harping on the fact that payments in India, I mean, we take it for granted right now, but the people who kind of paved the way really deserve a lot of praise and respect. Payments, even as late as 2007, 2008, where if you were to compare it, it was almost the dark ages, payments falling through and everything. BillDesk itself owns around 25% of the market. PayU is third in contention, and it would have been interesting, but not to worry. I mean, BillDesk is a significant player, and they're profitable as well, so they could perhaps look at an IPO maybe in the next 18 months or so. Otherwise, look, payments has also been affected because of what's happened with Paytm, for example, right? I mean, last year when they listed at a $20 billion valuation, and probably they're down to around 5 or 6 billion right now. And it's hard to ignore. Perhaps, I mean, the folks at Process were looking at all of this, trying to process it and figuring, maybe they got the jitters, right? I mean, they thought that they should probably rework the valuation or something, and they're using this for that. But payments is big, man. I mean, payments is the tip of the spear, right? I mean, whether it's for commerce, whether it's for lending or whatever it is. Right, and we'll talk about Cred, going further in the podcast. But it would have been interesting. Let's see how this thing gets resolved.
Yeah. Also, Hero MotoCorp, again, who have invested in companies like Ather, they finally launched its first EV scooter, right? And it's named Vida. Now, while Hero has been a laggard and has taken its time to launch its vehicle, right? So there's this really interesting quote which the chairman of Hero MotoCorp, Pawan Munjal, made. He says, while it may have been our wish to launch this product earlier than we had to get it absolutely right for the greater good of everyone. So the way I took this comment was a jibe towards what's been happening, with other EV companies, right, where the scooters are catching fires, like in and around the country, right, from Pune to Northeast India, right? But still, it'll be an interesting battle. Hero owns 34.8% stake in Ather, with another round of funding of 420 crore rupees coming up, which will see the share go up by another 2%. And while Hero has taken its time, the sort of, the brand advocacy it commands in the Indian markets, do you think they'll be able to make up for the gap which is currently facing?
I think for sure. I mean, it's also the classic innovator's dilemma, right? I mean, you have something that's working. Would you risk that and launch new products that could potentially compete with those existing products? Right, which is why, I mean, you have seen, whether it is TVS or Hero MotoCorp, sort of wait and watch how this EV thing pans out. At this point of time, I think given all of the factors, whether it is the economy, whether it is efficiency, whether it's the government incentives, we've spoken about the FAME subsidies, for instance, all of that, it definitely makes it lucrative for these folks to sort of invest in their own sort of brands and SKUs on the electric vehicle front. Interestingly, I think Ather has some clause perhaps limiting the ownership that Hero can have within Ather, right? I mean, they can't go beyond a certain percentage. They cannot also like push for an acquisition and things like that. I mean, I'm sure that they've taken care of all of these things so that they don't have an undue pressure on Ather, right? I mean, my money is on Ather for building out this market because they've been really thoughtful about their execution, right? I mean, they've been building since 2012, 2013,
Right.
and it's just more options means better for the consumers, right? I mean,
Right.
so it will definitely get interesting. Any kind of automobile is a brand and distribution game, right? And Hero, of course, has amazing distribution, right? You can find in the far corners of India. So we'll have to wait and watch. I mean, we'll have to wait and watch what happens. I really hope that they do have some really good R&D, and we get to experience some new and innovative
But talking about
tech.
R&D, right? I mean, this I think would be the biggest takeaway from this partnership. I mean, Ether, we have seen the sort of innovations they bring out. They even signed a battery deal with some Israeli startup, which we discussed in the roundup. So there's a lot of learnings which Hero can take away from that. But also, if you look at the customer segments which these two companies, target, right? I mean, Ether, I would still put it in a more like an urban crowd, whereas Hero, I think they would have a really strong foot forward addressing the tier two, tier three cities.
Yeah, for sure, for sure. I think in terms of the segment, right, Aether has chosen that segment very carefully. I was listening to an interview of Tarun's, and he was very certain that, look, I mean, the early movers who are going to adopt EV, right, they're going to adopt it for swag value, right? I mean,
Correct.
they're not going to want like scooters that they can barely show off. And this is again
That's
the
exactly what Tesla did.
Tesla did,
Yeah.
right? I mean, there should be some swag value. And believe me, I mean, I've seen electric scooters in 2005, 6, and they were ridiculous, like absolutely ridiculous, right? I would rather go on a cycle than a electric scooter. It was funny actually, right? And so we've definitely come a long way in that sense. So yeah, interesting times. I mean, I'll still hold on to that bet that I have that by 2030 at least some key segments of vehicles will completely be electrified.
Well, and hopefully we'll see more cabs getting electrified. But on that note, the Karnataka state government has declared that auto services of app-based cab and bike aggregators like Uber, Ola, and Rapido are quote unquote illegal and has asked them to discontinue the services. Now that kind of explains a lot as to why folks in Bangalore are facing such issues getting cabs. But reportedly, commuters have complained to the state government that the companies charge a minimum of 100 rupees as the base fare. And according to government norms, auto drivers are eligible to charge a fixed rate of 30 rupees for the first 2 kilometers and rupees 15 per kilometer thereafter. State police authorities have also said that ride aggregators are not eligible to run auto services as their licenses are applicable only for taxis. But if you were to think about this, we use services like Book My Show, we use services like IRCTC or any online platform, right? There's a convenience fee which is being charged because hey, you're able to do this thing by sitting at the comfort of your home and not going to physical locations to book anything. Do you think that sort of a argument would apply here, or how? What do you think Uber, Ola, and Rapido would be doing right
I mean, it's regulated, right? I mean, there is a minimum fare, right? I mean, which is 30 rupees in Karnataka. And I think the government is sort of looking at, these cab aggregators from that lens, right? I mean, that you can't perhaps charge more than 30 rupees. I feel the cab aggregator model has completely revolutionized urban life. It's brought down car ownership in some sense, right? I mean, or car ownership would have sped up way faster if not for these options, right? It's solved public transport to a great extent, right? Given the shitty infrastructure that we have, especially in Bangalore, right? So all in all, I feel that the government should really talk things out with the cab aggregators. I mean, they've had a rough time anyway with 2 years of COVID, right? And coming out of it now, I think the supply demand numbers are pretty skewed, right? Which is why you're seeing the prices go really high as well. And given the whole macro environment, the funding crunch and everything, right, these folks will have to charge the end consumers, right? There's no
now?
two
Right.
ways about it. These days routinely I pay 300 or 400 rupees for a ride which once would cost 170 or 180 rupees.
Right. No, I
uh,
mean exactly. I mean, just to go to your place, right, which is just a few kilometers away. I think on a cab aggregator platform, it shows me like 100, bucks. If I were to take a running auto from which just connects two main points between our houses, the auto drivers ask me about 250 bucks.
good luck finding exactly, good luck finding that auto driver who will go by meter, right? Because reality is that you'll have to go and negotiate anyway, and the fact that you will have to go down, wait for an auto to come by, all of that stuff, right? So there is a great degree of convenience, obviously, right? So this reminds me of what Paul Graham had tweeted some time back, in the early days, I think maybe around 2012, that time. Uber is so obviously a good thing that you can measure how corrupt cities are by how hard they try to suppress it. Now, I know that's an exaggeration, but really, I personally feel that there's been a round of negotiations, right? I mean, even 2020 November, they came up with some cab aggregator policies at the central level. These things are always in a flux. I feel like they have to be resolved. Or, I mean, hey, radical idea that might piss off some of the libertarians, right? Which is that the government should perhaps launch a cab aggregation model of its own, right?
It's going to happen in November this year.
They should. I mean, they should just launch it as a public utility because it's obviously a good thing, right? It's a fantastic model. I mean, it's very, very efficient, right? So why not do that?
Well, yeah, I mean, I remember reading this article sometime back that the Auto Union of Bangalore, they're coming up with their own ride-hailing platform and it is expected to launch sometime in November. So let's see. Until then, we still have to at least schedule 20 minutes to get a cab. Moving on, last year, the National Restaurant Association of India took the fight to Zomato and Swiggy after accusing them of monopolistic practices. NRAI alleged that Swiggy's Dineout app will hit the dine-in businesses or restaurants due to the steep discounts on offer and high commission charged by the company. They had run a similar logout campaign against Zomato Pro, I think it was last year, right? Which they said, ki, no, Zomato can't be like forcing restaurants to offer discounts. But then, of course, as expected, the company did find a way around where it started offering these discounts through Zomato Pay. And now this logout campaign, which is against Swiggy's dine-in business, it might really impact their acquisition of Dineout back in May 2012, which was worth $120 million. So, do you think this campaign, I mean, if we saw how successful the Zomato campaign was, right? Now, with Swiggy prepping for its IPO, the $120 million acquisition, which is now coming at risk, how do you think this is going to pan out for them?
Well, it's certainly tricky, and I always feel whenever you try to fight innovation with regulation, it's a net negative for everyone involved. Right? This is not the best. Really, I mean, I think Swiggy, Zomato, and the likes should talk it out with these associations and whatnot, right? I mean, but I do feel some of these associations and whatnot have to catch up. Really, you have to catch up. I'm not saying that there are no legit grievances and stuff. I mean, obviously there are for sure, right? But I do feel the restaurants have to sort of take this as a what benefits them basis, right? I mean, which is that, hey, I mean, if you see that there is a net increase in demand by listing on these sites, and if you think that or applications, and if you think that it's worth paying the commission, then it's up to you. No one is really asking you to sort of list
Right.
in these applications, right? It's weird how I'm defaulting to a very libertarian sort of an argument
Because
right
we
after
have seen like how
dissing them in
much
the
is.
previous segment. But yeah, I mean, I think the only way out is for these folks to talk things out, really.
Yeah, I know. I mean, it's great for consumers, right? I mean, I know I've been to, because just because Zomato Pro, right? I've been to places where I would usually not go to just for the discounts, and that becomes a habit in due time.
Obviously, see, there is definitely, the demand aggregation on the cloud, right? Which is what, whether it is Uber, Swiggy, Zomato, whoever else, right? I mean, which is what the basic model is. It's perhaps the most innovative thing that's happened over the last 15 years, I would say, right? From a consumer internet perspective. So fighting that is just ridiculous. I think people have to find ways to live with it, right? And I'm not, again, not saying that there might be there might not be genuine grievances, right? These grievances should be addressed, right? We've seen this with the urban company folks, for instance, right,
Right.
where they've been talking to their workers and trying to figure things out, right? And a lot of these folks, Swiggy, Zomato, and the likes, are also investing actively on all these healthcare benefits, value added services, insurance, etc., right? So we'll have to hope that things get resolved through some kind of amicable discussions and so on.
Oh, so last week, LinkedIn also released its report of top 25 startups to work for in India, and topping that chart was Cred. And also last week, Cred has launched its own UPI payment offering called Scan and Pay, putting the company in direct competition with the likes of Google Pay, Phone Pay, and Paytm. Apart from the basic UPI process, they've added a bunch of features like Cred Protect, which allows users to create an alias UPI ID instead of using the default one. It also has feature against transaction failure, where Cred will ensure that users' money is returned back to their bank account without the need of filing a complaint. I think that's going to be the one of the most loved feature. And we have also seen, like, when Kunasha first started off Cred, I mean, there was so much of talk in the media like, hey, does this even have a sound business model, right? And today we have seen Cred grow from a credit card bill payment platform, to having services like Cred Mint, right, which is a low risk investment product. Then they have a lending product called Cred Cash. There are payment suites called Cred Pay, and of course the shop and rewards platform Cred Store. They have come so far along, and now with UPI coming in, that's definitely going to drive up a lot of adoption. And even like there's this interview I was reading where one of the spokesperson of Cred was saying, he was asked like, hey, so are you going to onboard all merchants like how Google Pay and Phone Pay did? And the reply was like, no, we're not going to do that. We know the specific stores where Cred's users go and shop, and they're just going to focus on onboarding them for now. What do you make of this?
See, I think Cred's fundamental thesis of being relevant for the top 2% of India holds a lot of value. I personally feel that, right? I mean, I don't think banks or financial services companies in India are capable of giving that sort of exclusive treatment to the top 2, top 3% of folks, right? Because it has to be a technology driven approach, and Cred is a tech first company, obviously. So this was definitely coming, right? The fact that they were going to figure a way to sort of get more of the payments pie as well. And here, like you mentioned, the scan and pay feature, the fact that up to 10,000 rupees, any kind of problems, they will refund the amount, no questions asked. Or even things like they have in-app support on chat for UPI payment failures and whatnot. Now, all of this is definitely going to add to the experience, right? I mean that perhaps people don't get on other apps, other UPI apps as such. And the fact that Cred is already in the business of loyalty, rewards, and all of that stuff, right? So it's hopefully, it'll be more meaningful than these Google Pay scratch cards that nobody really indulges in
Well, I
anymore,
think I
right?
have close to 200 scratch cards.
Yeah,
I have to start from
I've
scratch.
lost count of it actually. So I think it might be more meaningful in that sense. Now, all of this is preparation for what is going to come, which is UPI 2.0. And if you thought the UPI thus far has been perhaps the biggest invention of the last 5 years, you should just have to sit back and look at what UPI 2.0 promises, right? So for the first thing, you can link your credit cards and not just your debit card,
Yeah.
right? Which opens up a whole other gamut of things that you can do, right? I mean, people who spend using credit cards can now amp up all of their transaction volumes and gain more rewards and whatnot, right? That is one thing. The second thing is something like UPI Lite, which is something like a Paytm wallet experience, right? So you can hold up to 2,000 rupees within UPI, and you don't really need a working internet connection to sort of transfer cash. And then you have UPI 123, which is that hey, you don't even need a smartphone to do something like this, right? I mean, you just give a missed call to a particular number and the transaction will happen. All of these are pretty amazing. And then you have UPI autopay, right? I mean, so RBI had introduced some guidelines saying that for autopay the PIN will be required, and which is why you saw Apple, for instance, not taken those cards, right? I mean, Indian cards, and you have to sort of pay through UPI anyway on Apple. So with UPI autopay, you will be able to do that more seamlessly. So all of your Netflix and mobile recharges, whatever, can happen through that. And then the fact that UPI is being actively internationalized, right? I mean, we have an agreement with Bhutan, for example. We're talking to Singapore, we're talking to France and UK and so on to really enable transactions in those countries, right? I mean, so you could perhaps go to a bakery in France or whatever, and perhaps pay using UPI. That would be pretty amazing. And on that note, having just returned from the US, few weeks back, I can tell you that the payment infrastructure there versus here, right? I mean, it's mind blowing. It's almost like they're living in the dark ages with all of the change and whatnot. So that's going to be pretty amazing, right? Remittances, again, with this whole UPI internationalization, remittances are a game changer, right? I mean, if you can get money across to your folks in India from abroad in a matter of seconds, as with UPI, right? I mean, UPI probably takes 3-4 seconds compared to a matter of hours and days, as is the case right now. That could be amazing. So all of this is a build up to UPI 2.0, and I think Cred is very intelligently sort of positioning itself to that. So on the product front, I think Cred has made a lot of progress, I would say, since the time they started. And who knows, maybe we'll have Kunal on the podcast sometime and talk to him about what's coming up.
But one thing I really want to give a shout out to Credon is the whole user experience they have. I mean,
Mind blowing.
I have seen tweets across Twitter saying that they
Yeah.
just want to try out Cred just so that they can check out the UI, right? And
Yeah.
I think that really speaks a lot about their design and product teams.
Yeah, props to their design and product team. I think they're setting the bar for excellence in Indian startups.
Yeah. All right, talk of town. So Sequoia, in association with Nat Geo, has released its latest season of She Builds, which is a docu-series highlighting the work done by some of the finest women entrepreneurs across the country and abroad. And in season 2, we also have Yamini, who is the co-founder and CEO of Vimo. And Roshan, I mean, you have had the opportunity of working very closely with her, and you have also seen the film. So, what are your thoughts on it?
I think the film kind of does justice to who she is. She's a fantastic person, great person to work with. right? And it's also a very inspiring series, really profiling women builders. So I'm really excited for the other episodes as well. Some really amazing founders being profiled. Last year we had Ashwini Ashokan and the founders from Animal and so on, right? So this year as well, I mean, you have quite a lot of founders.
So apart from Yamini, so in this season, apart from Yamini, we also have ProCap's Pallavi Srivastava, Wingreen World's Anju Srivastava, Lemonello's Shinta Nurfozia, and Beauty Hall's Irene Ursula. And these are some fantastic founders who have these are some fantastic founders, and I'm really excited, what sort of impact shows like this will actually help in getting more women entrepreneurs take the main stage.
Yeah, for sure.
Apart from that, Roshan, I really want to discuss a tweet which you had put out recently, where you're talking about how the SaaS selling to SaaS gravy train is soon ending, right? And do you want to read out your tweet?
Okay, all right. The SaaS selling to SaaS gravy train is soon ending. And the reason isn't that software is commoditized. There's always dollars in a fragmented market. It's because what should have been a 10% lifestyle business is now a 30% go for broke VC funded business at less than $1 million ARR. I think I was being a little more charitable. I think it's perhaps less than 500K ARR, right?
Yeah, I think this was also right after your SaaSter trip.
Yeah. Just a few reflections after I went to SaaSter, right? See, we talk about the optimism in SaaS, and I think there is more than enough reason for that, right? In fact, if I talk any more about SaaS, I mean, people are going to ask me to change my Twitter handle to Sassy Roshan, right? But but look, I mean, you also have to face the reality that folks have also had the Kool-Aid a little too much. I think few of these companies that I saw shouldn't even be products, and few of the products shouldn't even be plugins. Really, I mean, it might sound harsh, but that is the lens I have for a company which is supposed to become $1 billion exit for someone, right? I mean, an investor, whatever, $1 billion company. If this was a lifestyle business, hey, more power to you folks, right? I mean, build that 45th product in a really fragmented market and make a few $1 million of turnover, and that'll be amazing, right? I mean, that's props to them. I mean, I would love to run such a business, right? But it isn't. I mean, these are barely at a few 100K ARR, right? Seed funded and already at a valuation of 10 million or 20 million dollars. And so they're on the hamster wheel, right? I mean, they're going to have to seek more higher valuations, and they're going to have to grow at that ferocious rate that VCs expect, right? 3x, 3x, 2x, whatever it is. And in these markets, which are super fragmented, when there is almost no differentiation between one product to another, really, you tell me how one spend management product is different from the other, right? I mean, I don't see it. And when you're selling to other software companies and not really building any kind of domain or vertical intelligence as such, really, I mean, it's a huge risk. I mean, so I really thought about this. I mean, it was on my mind for quite a few days before I actually put that thread down. You're going to see a lot of creative destruction, let's put it that way, in the time to come in this segment, at least, right? I mean, but again, the lesson from all of this is for founders to really ask that hard question, right? What kind of a business do I want to run? I mean, what kind of exit am I looking for? Am I looking at an exit at all, right? Because I think with all of this funding enthusiasm, people have this one template in mind that hey, have an idea, raise funding, build a team, and then raise the next round
Valuations
and whatnot, right? I mean, that does not have to apply to every startup, every product. Certainly there could be products and startups where it's just a one person or a 5-10% company turning a few $1 million and being really happy with it, right? I mean,
Yeah, I mean, something I think was just code a plugin that
Yeah.
automatically picks up certain keywords from text, right? I mean, leave that to be a plugin. Why build an entire company around it?
There is this amazing case of this guy Amit Agarwal, right? I mean, he's a legend. He's also one of the early tech bloggers in India. I mean, he's been doing this for 15 years or something. He makes reportedly, I think, somewhere between 15 to 20 million dollars a year as a one person company. And he started off by publishing plugin on the Google ecosystem that does mail merge, right, for Gmail. And similarly, he's got, I think, around 10 or 15 of these applications which have been downloaded thousands of times, perhaps more. So yeah, I mean, it really depends what you define success as, what your end goal should be, and then accordingly take one path or the other. I mean, you don't have to take that beaten down path of, okay, have an idea, raise funding, and get on the hamster wheel.
This also reminds me of the show Silicon Valley, where
Yeah,
they ask, "Are you chasing valuation? Are you chasing revenue? Or what are you chasing?" I mean, it's
there's a
very
classic
fundamental.
line from that show where the guy, where Richard, I think, is talking to this other founder whose startup has just imploded, right? And he just asks a very 101 engineer kind of question, right? Which is that, why didn't you take less? And the guy was like, fuck,
I
you
did not
can
even
take
think
less,
about. Yeah. So, Roshan, I know biryani is on this, so let's wrap this up quickly. This week, you'll be talking with Anubhav Jain of Rupify and Subbu, who is the co-founder of Blackbuck, and he'll also be a second guest from Blackbuck in our podcast. Tell us what you'll be chatting with them about.
Rupify is interesting. They're in the whole B2B payments space, and it'll be, I think, this perhaps the second or third, maybe more. I mean, we've spoken to quite a lot of payment companies, right? But it'll be really interesting to understand more on their market and their execution, what they're seeing at this point of time. So that's that. And look, Blackbuck is one of the most interesting businesses I think that's come out over the last 10 years or so. We had Deepak, who is the chief data scientist there, explain some of the nuances in terms of what is the kind of data analysis that they do. Here, I think with Subbu, I'll focus more on the business side of things, right? I mean, talk about their thesis and how they're sort of executing. So both very interesting episodes. In fact, last week I recorded an episode with Shruti of Apna Club, which we perhaps will post in 2 or 3 weeks. They have an event coming up and they want to time it with that. So overall, a lot of interesting content coming up. Do check us out. Of course, I mean, if you haven't rated, reviewed us. So if you haven't rated or reviewed us, I think you should definitely do that sooner than later. I think help more people discover our content, and for one lucky winner, I'll even send a pot full of biryani as well, right?
Straight from Calcutta using Zomato Legend.
Thanks for adding another 2000 rupees overheads on what I thought would be a 400 rupee expense. But yeah.
If you'd like to drop us a note, you can reach us via our Twitter handle, which is at Operator Startup, or through LinkedIn, The Startup Operator. Our email ID is thestartupoperator@gmail.com. And if you'd like startup updates to be delivered straight into your WhatsApp inbox, you can check out the description below where you'll find our WhatsApp link. Do subscribe to that. Until then, take care and have a great week ahead. We'll see you again next Sunday.
All right, guys. Thank you. Keep it real.